All right, so good afternoon, Open Journal traders and fellow market participants. Welcome and welcome back to the weekly strategy update. Nandito na muli ako, Have Medina, at your service, right? And so just very quickly, I was out, spent 10 days with my wife and her family in Thailand, which is her happy place. Came back just this Sunday with pasalubong, right? So all of us pretty much tested COVID positive yesterday, right? So it's a mild one naman. And I've never really taken COVID very seriously. So I'm just excited to just, get through this, and so I can go out, start exercising, see my dog, etc., so forth, right? And it's a good time to stay in because the markets are giving us a lot to digest, right? And for this weekly strategy update, I opted to do a 2-hour thing, not only because the market is giving us a lot to talk about, but also because I wanted to run you guys through the presentation I did last week at the 2022 Investa Summit. And that presentation was entitled 0 to 100 million Part 2, right? So this is essentially the same presentation I gave last year, but the second part talking about a different set of characteristics, and titled Profiling All the Philippine Traders I Know, Who Did It, and What They Did in Common. So guys, if you guys were present at the Investa Summit last week, can I see a present at the chat box, please? Para makita ko if you guys were present, so at least I know if I can, breeze through this quickly or if I need to elaborate even more. If you guys were present, just feel free to say present at the chat box if you were able to attend the 2022 Investa Summit last week, if you were able to listen to this particular talk. Anybody in particular? Going 5, 4. Wow, okay. So this is a new material for everybody here, right? So I'm going to go through this very quickly. All right, thank you, F6MD, right? So if you look at the presentation I did last Sunday, this is essentially how I thought that I could add the most value, especially to the Philippine trading community. As most of you guys know, I started my trading career pursuing the market full-time in 2010. I worked under an asset management group in partnership with COL. That was 2010 to 2013. That was very funda and macro-based. And then 2013, I had the opportunity to work under Edward and Juanes all the way until 2019, coaching for Kalum for 6 to 7 years, teaching risk management, trading psychology, and during the time being around the COL, the City Securities ecosystem, and through the time building relationships, also building a barkada essentially with other people from Sun Securities, from Tower Securities, building relationships with Wealth Securities, basically all the brokerages that you see in TechTite, and also through the time other trading communities as well. As you know, we're all friends. We all know each other with Diego Mojica, with Jet of BOH, George of CFT, and obviously Aki back in 2017 when we met at the competition. So essentially, I've had my foot in a lot of trading circles, right? And arguably, you could say that I had a chance to be at the center of the Philippine trading universe. The center being, let's say, if you account, let's say, for the Lee family and the C family as the center of that. Not only that, I was also part of the CMT group with people there, such as Nikki and guys like Lawrence Gonzaga, the OG CMT in the Philippines, and other upcoming technical guys, right? So it's been a long 12 years. And I thought that within that 12 years, one of the things that I could do was profile all the people I know or I knew who went from 0 to 100 million. And so just to go through some of the slides very quickly, when I did the presentation, I did start with the most important disclaimer that when I talk about the people who I know who went to at least 100 million in liquid trading net worth, meaning ito yung laman ng C1 account nila, ng IB account nila. This is not like their net worth including their house. No, this is their grub stake, the trading capital that they use to trade the financial markets. And when I came up with a list, and obviously there are a lot of people that I probably have known throughout those years that I never had a chance to see their portfolio. So they could be part of this list, but just because I don't have that confirmation, they're not part of this list. But the people that I know who's made it beyond any reasonable doubt are a list of 10 people. And these 10 people are what I call the tip of the iceberg. And that's an important disclaimer I start with because, as we all know, 85 to 90% of people who engage or to at least try their luck with their market lose money in financial markets, 85 to 90%. And I would even argue that the reason why the people who make so much money is because 85 to 90% of the people who lose money essentially give the money to the 10 to 15% who make the money, right? And since 85 to 90% of people lose money in financial markets, then we could, surmise the 10 to 15 make money. And out of the 10 to 15, how many of those actually go to 100 million or to $2 million, right? For at least our foreign participants. And the statistic is extremely low, right? There's no particular study to reveal or to isolate that statistic to a particular number. The closest I found is in 2018, I had a chance to attend Wealth Mastery Seminar in Fiji by Tony Robbins. And one of the speakers, an Indian gentleman, head of creativeplanning.com, who's one of the, if not the number one of the top financial planning firms in the United States, said that out of the 10,000 plus professional fund managers, traders, managers of UITFs, mutual funds, hedge funds, RIAs in the United States, he said that over the last 20 years, only less than 3% are able to outperform the market every year, right? Meaning 2020, there's 3%. 2019, there's a different set of 3%. 2018, there's a different set of 3%. So if you take a look at those that actually are able to make it to 100 million, I would say that these are the people that do it consistently, right? Meaning it's even much less than 3%. In the Philippines, I would imagine that it's maybe less, and this is already very generous, less than 1/4%, maybe even less than 1/10%, right? Less than 0.1%. That's already a very generous number. But nevertheless, these are people that we can study. And the reason why I share this with you also today, and the reason why I shared it last Sunday, is because this is also the playbook that I use for myself, right? This is the playbook that I use, and the same playbook that I use to also reach that level. Full disclosure, I almost reached it at the peak of the crypto cycle, right? Not almost, but maybe between the 50 to 75 percentile. But I've given a big portion of that back, and and this is still the playbook that I'm still trying to use to really get to that level. So just very quickly, so we talked about this, 3% of US professionals outperform the SPX every year. That's a 20-year study by creativeplanning.com. Also, a statistic, 70% of US hedge funds just struggle to survive, right? So in this industry, it's basically a survivorship bias, which means that Most of the people you see post on Facebook, most of the people you see post about their winning trades, these are 1 out of 20, 1 out of 30. I mean, obviously, if people lose money, you won't see them post it on Facebook. You won't post it on social media, which the sad thing about it is the rule and not the exception. The exception is mostly what's posted on social media. So just to give you guys an update, I'm sure you guys attended the same exact talk back in 2021 during the Investor Summit. And during 2021, these were 8 people, right? These were 8 people. Now that I've updated it for the second year, we're now at around 10 people, right? And very quickly, these 2 new people are people that I've been able to confirm through some of their close associates and confidants. The 2 new people here, I was not able to confirm it directly, but I am 99.99% sure that they are part of this list. And the first person here, new person, is a trader that pretty much came in the late 90s in City Securities. And he has since then gone on to work in several brokerages. And recently, during the 2020 pandemic, he was able to build a concentrated position in Tesla. And built a concentrated position in Tesla. I have no visibility on how long he held that, but what I do know and confirmed is that after he sold the position, he bought a house in Northeast Green Hills for 290 million pesos, right? And that was pretty much his first major score. And as you'll know later, it's concentrated positions in leaders in advancing phases or bull markets. That's really been the formula for most of the people here. The other person who's new to this list is someone that I've worked with in the past in COL. And this particular person has moved on through other firms. And I would say the best thing that he did was that he pivoted to cryptocurrency in 2018, working on a professional capacity. And the one thing that he did was he made a large early bet in Axie Infinity. And this was back in 2018, 2019. If you simply look at the chart, it was around 40 cents during that time, 30 cents, 40 cents, 50 cents. And get this up. He held it through the COVID drop. He held it through that COVID drop. And he even said that during the COVID drop, he was already supposed to write off his Axie investment. Write it off na, meaning cut loss na malaki, right? But eventually he held on to that. And that investment, and get this, and this is confirmed, turned into a 7 to 8 billion peso position at the peak, right? So it was a 7 to 8 billion pesos at the peak. For our foreign friends, that's what? Around 20, that's around 120, $140 million, right? And it doesn't end there. Obviously, the challenge of holding for that long is being able to exit, because your override for the last couple of years has been to hold the position. And what I was able to confirm is that he got out at around just under 2 billion pesos. So from 7 to 8 billion to 2 billion pesos. I don't know what his starting capital was, but what I do know is that back in COL, he left with around just under 20 million in capital. So I have no idea how much was bet in Axie, but the point is that these people exist, right? And the reason why I also share this in particular to the Philippine community is because, I mean, guys, let's just keep it simple, right? Let's not try to reinvent the wheel. When I was attending all those Tony Robbins seminars in 2018, 2019, the one thing he taught was the principle of modeling, which means that if you're someone, let's say if you're a trader and you have a goal, me personally, my goal is to hit critical mass. I want to hit 100 million, and eventually after that, I want to be a billionaire as a trader, right? That's me. So for me, the fastest way to get there from point where I am, letter A, to point B, 100 million to billionaire, is to simply look at the people who have already done it, right? What did they do? And let me adjust my style towards that, right? And this is precisely why ako, over the years, for most of you guys who have followed me over the years, syempre, I come from the COL, City Securities background, where it's very short-term trading, scalping-oriented. And over time, I've evolved to still a trader, but a trader who tries to hold through advancing phases, who tries to hold on to the positions much longer. And that's adjustment that I've made simply because by following the people who have gone where I already want to go, right? And I share this to you because, I mean, who in open journal doesn't want to reach 100 million, right? Obviously, the sad thing about it is that not all of us are going to reach that level. I just say that because that's statistics. When I attended the 2017 Mark Minervini Master Trader program, at the end of that program, Mark Minervini pretty much, was straight up and real with everybody and said that, 97% of the people here are not going to be able to learn and apply the principles that he taught and, not be profitable. Only 3% are going to make it. And that's already Mark Minervini's master trading program, right? Which is pretty much, I'd say if you can afford it, the best training program for trading you can attend in the world today, right? So going back to this list, there are 10 people in this list, but there are few qualifiers that I included, right? Meaning there are certain qualifiers that I think you guys should know. And the first thing is, part of this list, I did not include Boss Edward or Boss Wilson C, right? And to me, that's just as a form of respect to them. Para respeto ko na sa kanila. Because syempre, these guys are billionaires. I mean, not only are they billionaires, but they are at a different level altogether, right? So I didn't include them because they're billionaires. And they're billionaires because, they also own publicly listed companies, right? Boss Edward with COL and City Securities, which is now listed. And syempre, Boss Wilson with Vantage, right? And being able to earn from the management fee from the Phil equity funds. So part of this list and part of the respect also to the Lee family and to Boss Wilson is I also did not include their family members, like their children. I didn't include Edmond. I didn't include Lawrence. I do know that they have a lot of money that they trade. Over the years, though, I never had any visibility on the size of their COL account or IB account. And, as part of my respect to them, di ko na rin sila sinama dito. So other disclaimers would be, these are people that when I was making this list, I wanted these people to be as relatable as possible. Meaning these guys started with zero or personal savings. They had to save their way to start investing in the stock market. And I talked about a guy on this list who started in the late 90s, came from the province, worked in City Securities with only literally 100 pesos in his wallet. And he would always tell this story how during the 90s, during the dot-com bubble, he would need, or even leading up to the dot-com bubble when he was starting, he would need to borrow money from the head trader at the time para lang may pambili siya ng delata na pagkain, right? And, that's a story that he hesitates in sharing because, he's a very low-profile, humble guy. But, there are a lot of stories like this. And, this is a guy who in the late 90s and was able to reach was able to reach at least 100 million starting, if I'm not mistaken. He made a lot of money during the dot-com boom, and then he was able to make a lot also when COL publicly listed, buying a lot of shares of that stock. So needless to say, I'm keeping all these guys anonymous because I don't have their permission for them to be in this list. But another qualifier I had was that these guys are in the markets full-time, right? Full-time still as a market. They're not part-time, they don't have a business, and then they invest, on the side. So these guys are all full-time. They're also first generation to build wealth, which means that they didn't have like wealthy parents to ask 10 million, 20 million, 30 million from. Most of the people here, I literally saw start with 3 million, 4 million at the bottom of 2008. Two guys here started with around 3 to 7 million at the bottom of 2008, because that's when they started in the market. That's the money that they got when they retired, and that's what they saved up. And I literally saw in 3 years, they brought that to around 300 million, 300 plus million, right? From the bottom of 2008. While investing and trading that in the Philippine stock market, right? Another qualifier is fully verified beyond reasonable doubt. So maybe fully verified beyond the 99% reasonable doubt, if you can say such thing. I don't have their confirmations per se, but a lot of these people here, I'd say half of the people here, I saw the account with my own eyes. The other half here, I literally, confirm with them verbally and confirm through other sources, and we're big winners in certain trades. One person in this list is benefited from a highly concentrated trade in Nickel Asia back in 2014-15 or 2016. That was when Nickel Asia went up a lot, and this guy had a huge position in Nickel Asia and was on top of that particular investment every day at the Nickel Asia Investor Relations office, just trying to stay on top of the catalyst and so on and so forth, right? That person ended up making 140 million out of that Nickel Asia investment. So other qualifiers here is, obviously, I don't know how much of that 9 digits they've given back. The two new people here are obviously fresh, so the capital is not too very distant. But the other people here were people that legitimately reached 9 digits easily. And whether they were able to keep that or maintain that, I don't have any visibility of that anymore. So just to summarize very quickly what I presented in 2021, obviously I said that they knew how to hold. This is as opposed to, people, traders who, buy a position, sell at 20-30% gain, look for the next setup, cut small, next setup, and then at the end they have a 50% batting average. That's different, right? So these people have, they knew how to, they knew when to press it. And after pressing it, they knew how to hold, right? They benefited mostly from holding on to market leaders. I talked about Axie Infinity. I talked about Tesla. I talked about the guy from Nickel Asia. The two guys that brought their wealth from between 3 to 8 million to around 300 million were in market leaders. They were in DMC when DMC went from a couple centavos to a few pesos. From ICT when ICT was around $1, so on and so forth. So it was a huge part of that wealth was created by market leaders. And number 3, they learned how to hold through volatility, right? You can't make big money without confronting big swings and real market volatility. So that was what was common to all of them. Second of which is at some points they developed the conviction to take concentrated risks. And I think the most important point here is at some points in time. And during the presentation last Sunday, I alluded to a YouTube video available online by Mark Minervini and how he talks about what makes Mark Ritchie, his new assistant, a great trader. Mark Ritchie, obviously a participant in the Master Trader program every year since 2010. He was part of the Momentum Masters books, and this is a guy who turned 100,000 to 25 million. And the thing he said about Mark Ritchie is that what separates Mark Ritchie from the rest is that Mark Ritchie knows when to turn on a dime, when to know when to hit the brakes. He can stay on the sidelines for a few weeks, for a couple of months, and then at the turn of a dime, he can go pedal to the metal. That's obviously a paraphrase, but that's pretty much what Mark said, which means that at certain points in time, the best traders know when it's time to develop conviction and take concentrated risks. What Stan Druckenmiller calls totus porcis, or the whole hog, right? So he goes on to say the way to build superior long-term returns is through preservation of capital, that's great defense, and home runs, great offense. When you have tremendous conviction on a trade, you just have to go for the jugular. It takes courage to be a pig. And that's something that is self-explanatory in Open Journal. You guys know, easier said than done, but you guys know that the way to really get to that level is to great defense and great offense. Great defense meaning you're able to play defense, cut small, but when the time comes, you're able to play great offense and size up to concentrated positions, right? With a risk-first mentality, obviously. So apart from Stan Druckenmiller, you have Raul Pal of Real Vision, and he says that very few people have made money from short-term trading / diversified portfolio. Real money is made from concentrated risk-taking when you've done all of your homework. You're utterly confident with the risk-reward. You have a game plan taking into account all the info available, right? And for those of you who have been in the markets for a while, you know, there are those pockets where it really is time to take concentrated risk. And those are essentially the points that I presented last 2021. Since you guys are in Open Journal, if you guys would like the presentation, you can simply access that in your Investa, in the Investa platform, Investa University platform. So this is what I elaborated on last Sunday, right, during the Investa Summit. And what I elaborated on was that yung mga traders that went from 0 to 100 million, they were able to hold through the advancing phase of the market, whether they knew it or not. And this is kind of funny kasi the two guys, 3 to 8 million that went to 300 plus million, they were deliberate that we are entering a secular bull market, and therefore we need to, you know, get as many clients. We need to be able to stay fully invested as much as possible. So there were some guys that were very deliberate that were entering a secular bull market. Now there were other people that I honestly think that they were just in the right place, right time, that they held during the right place, right time. Obviously, people like that give back a lot of profits because they're not aware that it's an advancing phase. So, but that's really how the people made it. They didn't make it by shorting the top or buying the bottom. No, they pretty much learned how to hold through the middle, the meat of the move. And what most Open Journal people know, the advancing phase, and remember the advancing phase is pretty much from the Minervini stages of a stock market cycle. Stage 1, neglect. Stage 2, advancing. Stage 3, topping. Stage 4, decline, right? And in Open Journal speak, that advancing phase is simply your wave 3, right? Meaning your neglect phase is your 1, 2. Our advancing is our wave 3. Our topping is our 4, 5. And our decline is an A, B, C. So just to you know, get everyone's, just to realign and to center everybody to the purpose of this discussion is that it was really holding through this portion of the cycle that these guys went from 0 to 100 million, meaning advancing phase talaga, hinawakan nila, right? Like Axie Infinity, right? That was a very sweet advancing phase from late 2020 through middle of 2021. That was clearly an advancing phase. And di ba, syempre, part of it is swerte, part of it hindi rin. Part of it is swerte rin na Axie Infinity yung nahawakan mo. Diba? I mean, obviously, if you were just holding Bitcoin, let's say 10,000 or let's say 3,000 to 60,000 times 20 versus Axie Infinity, 40 centavos to at the peak $140, right? I mean, diba? Syempre, there are levels to the compounding if you're holding on to leaders during the advancing phase. So that's really what was common to all of them. And the whole point of my presentation last Sunday was, okay, now we know that we need to be able to hold through advancing phases, or more importantly, we need to be able to identify when, kailan ba natin malalaman pag advancing phase na, 'di ba? Kasi yun naman yung importante. Ngayon alam na natin na we need to hold through the advancing phase. So now the question is, how do we know it's an advancing phase? What do we use to identify that it's an advancing phase, right? And for me, the particular tidbit or insight that nakuha ko from the Jack Schwager's book, The New Market Wizards, is the section of Stan Druckenmiller. And he says that I never use valuation to time the market. I use liquidity considerations, number one, liquidity considerations, and technical analysis for timing. Valuation only tells me how far the market can go once a catalyst enters the picture to change the market direction. So guys, I hope you see now the connection with why we talk about what we talk about in Open Journal. Because syempre, number one, we want to ride the advancing phase. Number one. Number two is, if we want to ride the advancing phase, then we need to identify the advancing phase, right? So, paano natin identifying advancing phase? Two things, liquidity considerations, which time and time again, we talk about in our weekly strategy updates. Sino bang responsible for liquidity? Yung Fed, di ba? Kasi we always talk about how the Fed, while the US only accounts for 20%, 25% of global GDP, the US or the dollar accounts for 87% of all transactions that happen globally. And that's why the dollar liquidity is important. That's number one. When we talk about liquidity considerations, that's why we follow FOMC meetings. That's why we hinihimay natin yung mga sinasabi ni Kuya Jay, ni Jerome Powell, right? And that's why we stay on top of liquidity. That's why we stay on top of yung mga posts ni Michael Howell about liquidity, about the liquidity cycle as driven by the US Central Bank. That's number one. The second thing that we're able to piece together the advancing phase is through technical analysis. And you guys need to understand the context of Stan Druckenmiller. Stan Druckenmiller in the late 90s, for around 6 to 7, 8 years, worked under George Soros, right? So George Soros had an arrangement with Stan Druckenmiller where Stan would manage money with Soros under the Quantum Fund. But at the same time, Stan would also be able to still manage his clients at Duquesne Capital. That was the arrangement. And you guys need to understand that the history of George Soros. George Soros benefited from the 1987 Black Monday crash. And if you look at his memoirs, the reason why he was able to benefit that, and this is not just George Soros, but also guys like Paul Tudor Jones. The reason why they were able to stay on top of the crash, and this is something that you can search online, is because they attributed them being able to identify the crash to the work of Robert Prechter, who at the time was guru of the decade. right? Guru of the decade, the guy who popularized Elliott wave. So for me, I can only surmise that when Stan Druckenmiller says liquidity considerations, meaning looking at the US Central Bank, which accounts for 87% of all transactions, when he says technical analysis, I am assuming and guessing that because of his exposure from George Soros, that to some extent, he also incorporates an element of Elliott wave in his analysis. Although if you look at his interviews, he's also very heavy on macro. He's also very heavy on Fed policy. He's also very heavy on the fundamentals, right? And the fund flows and the classical technical analysis side of the intermarket analysis of the market, right? So those are the two things that we try to piece together to be able to identify the advancing phase, right? The classical technical analysis, the Elliott side, and also the liquidity consideration side. Because, syempre, the purpose of that is we want to be able to identify the advancing phase. Why? Because after we're able to identify the advancing phase, then we're able to, again, using a different set of tools, sino ba yung mga leaders? And kung sino yung mga leaders, we need to be able to identify what the runway, like how long is the window? Kung advancing phase to, sabihin 1.618 target, sabihin 2 fib extension, saan yung 2.618? So at least we can use that to identify, okay, yan yung window. And then throughout that window, we can stay fully invested in the leaders, right? And personally ako, that's how I, made whatever capital that I have today, right? In 2020, I was able to really ride the advancing phases of Polkadot, of Filecoin, of Dodge, of a little Zilliqa, a little Audio USD, Matic to a certain extent. So yan yung mga, yan yung gusto natin, right? That is the purpose as to why we do the weekly strategy updates. It's very simple. It's for us to stay on top of the market. Why? Because we need to know anong phase ba ngayon? Should we be mentally prepared for an upcoming advancing phase, which we will go to later, right? And then using liquidity considerations and technical analysis to really using that to really answer that question, right? So that's really so moving forward, if you look at the liquidity considerations, if you've been in Open Journal for a while, the one thing that we always talk about is the DXY or the dollar cycle. Now, this chart in front of you, the white line, is not the DXY. This is the trade weighted dollar. So the reason why I use the trade weighted DXY, which is available only through Bloomberg. Syempre, if you look at the DXY is 50-60% is 50-60% composed by the euro, right? The euro currency. And then if you account for the JPY as well, that accounts for already 70-80%. So if you look at the trade weighted DXY, it doesn't weight it based on, let's say, 60% euro, but it weights it based on the GDP contribution to global GDP. So kumbaga mas equal weighting based on yung kumbaga weighted average based on the GDP contributions to mga currencies. So it's very similar naman if you compare the DXY to the trade weighted DXY. But the point that I want to share is that if we want to be able to identify advancing phases, a component of that, liquidity considerations, one of the best things to look at, which is affected obviously by the US Central Bank, is the dollar, right? And it's very simple, guys, right? And guys, I'm sharing this to you as like a trade secret, right? Because like, for example, when I was managing money professionally in the asset management group, 2010 to 2013, the dollar was pretty much the number one thing that my bosses looked at, right? And, that was something that they just kept behind the scenes, di nila sinasabi sa clients. But the dollar cycle is what helps a lot of the professionals see if we are in a risk on or risk off period, meaning risk on period, meaning advancing phase. And as you'll see here, which is evidence of that, if you look at the dollar chart since mid-1970s, every time the dollar goes up, you have risk off, meaning may bear market, may crisis, right? So if you look here at the peak of the dollar, that's pretty much when you had, this is when you had the inflationary crisis, right, in the Western world. And then this move going down here, the dollar from 1985 all the way to 1990. This was the period when, if you look at the Philippine Stock Exchange Index, you will see a large up move in the Philippine Stock Exchange Index. Now, a lot of professionals will say that yung up move na yun was because we just ended, kaka-EDSA revolution lang natin nun. We just ousted Marcos and we became a democracy for the first time, right? And that was why, at least when I was in the industry before, pitching to a lot of mutual funds, UITFs, they would always say that that was the beginning of our bull market because we became a democracy. We ended martial law, right? But in reality is that there was a global tailwind, which arguably was stronger than us ousting a dictator. And that was a weakening dollar, which a weakening dollar pushes money back into emerging markets, right? The Philippines being a beneficiary of that. So if you look here, 1990, 1994, dito talaga, ito yung mga golden era ng Southeast Asia, right? Ito yung mga nabuo yung mga tiger terms, di ba? Nagkaroon ng mga Asian tigers, ganyan. Like Singapore, Philippines, we were heralded as one of the rising tigers in Asia. That was the Philippines because we were a new democracy. We just came from a peaceful revolution and we had this, yellow government in place that was going to change the Philippine economy. And ito yung panahon na, I'm not sure if you remember, but ito yung panahon na biglang naging democracy tayo, tapos biglang ang daming gusto bumili ng kotse, 6 months yung pila bago bumili ng kotse, late 90s. Ito yung panahon ng landline, may mga parts, let's say in Quezon City, 6 months bago makakuha ng landline, ganyan. So that was really the boom that we had. And then when the dollar started to go up, this was during the Asian financial crisis. That's what triggered the Asian financial crisis. You had rise in the dollar, you have a risk off, right? This was not only the Asian financial crisis, but this was the dot-com bubble. And then after that, you had the dollar drop, which from around 2003 to 2007, you had a bull market in Philippines equities and US equities, right? After the dot-com bubble. And then after that, you had the subprime in 2007, which was this spike over here, right? This spike over here. And if you'll notice, which was this spike over here. And if you'll notice, and what I'll do is, since this is a chart that only spans until November 2020, what I'll do is I'll jump to the DXY chart, right? And what you'll notice over here is that this peak over here was pretty much the COVID bottom, right? This is the DXY over here. This is the COVID bottom right here. This 2016 over here, this dollar was pretty much the low in the ascending triangle for the Philippine market, right? So you can see talaga there's a correlation between the dollar and risk assets talaga. So just to center just to get everybody centered again, we look at the reason why we look at the dollar is because the dollar is the best measure of liquidity considerations, which is driven by the Fed. And the reason why we look at liquidity considerations is because it's one of the two major components of trying to answer whether we're in an advancing phase or whether we're in a wave 3 of a cycle, of a 1, 2, 3, 4, 5 ABC cycle, right? So if you look at the dollar right now, there is argument, or there's an argument that can be made from evidence that the dollar has already topped, right? What do I mean by that? If you look at the dollar in front of you, if you look at the beginning of the cycle low over here, you have a 5-wave up move, that's 1. You have an ABC in a 2, right? And then you have an extended wave 3, which is what we teach in Open Journal, right? You always extend wave 3, 1. So follow my arrow, 1, 2, 3, 4, 5. And how do you know that wave 3 is extended? You simply need to check the RSI. Since wave 3 is always the strongest part of the move, then wave 3 of 3 should be the strongest part of that. And you'll know that by having an oscillator extreme. What do I mean by that? You'll see peak RSI. So if you look at the dollar, you see peak RSI over here. That's the OX 1, 2, 3, 4, 5, complete wave 3. And then we had a wave 4 base out over here. Now, some of you may argue that's not wave 4 because it overlaps with wave 1. If you go through the details of the wave principle and by Prechter, wave 1, wave 4 overlap applies on a closing basis, not on an intraday basis, right? So you can argue that you had no overlap on a closing basis, and this was indeed a wave 4 kind of base. This was a wave B of a wave 4. You'll know it's a wave B because it's choppy, overlapping, and choppy, overlapping in nature, right? Kumbaga, there's no clear magnitude base, magnitude base, magnitude base, run-up base, run-up base. Hindi klaro yung ganon, right? So that's clearly a B wave corrective structure. And then you have a C wave going down, and now we have a wave 5 going up. And now the question is, has the dollar peaked, or do we have more upside in the dollar? So those people or technicians that would argue that there's more dollar upside would point to the minimum breakout target of the wave 4 base, right? You take the size of the wave 4 base, put it on top, and people will say that, oh, 120 yan. Kailangan mo mag 120 bago mag-top out yung DXY. I mean, that was something I was also looking at very closely as well. But what changed my mind was, a couple of things. First thing was these two black lines over here, the 113 and the 115 area, right? These two black lines over here correspond to the typical wave 5 target as it relates to wave 1, which is 1:1. And as it relates to wave 1 to wave 3. You take the distance from the beginning of wave 1 and measure that all the way until the end of the extended wave 3. You take the size of that and you take the 618 of that size. And you'll see you'll have a confluence target here at around 113, 115. So syempre, with those two targets in mind, syempre that's not enough evidence for a technician to be convinced that nag-top na yung dollar. Syempre, those are only like potential targets. But for me, what really started to give me conviction was really this one, right? So it was number one when we had an E1 failure, and this is a daily zoomed in chart. This is a daily chart of the DXY. What gave me conviction was you draw a channel, nag-fail yung E1, right? Which is, I believe before I left for Thailand, yun yung sinabi ko na mukhang mag-break yung E1, right? So, ingat that you watch the E1 failure. So that's number one. We had a break of the E1. Well, in Open Journal, if you don't know, dapat alam niyo na an E1 failure is the demarcation line between a corrective base and an impulsive move lower. Meaning, kung nag-hold yung E1, ibig sabihin yan, it's a base, a corrective base, whether it's a flat base or whether in Kalum terms, whether it's a flat coil or a falling coil, either way, nag-hold yung support ng parallel yung support ng parallel channel mo. Nag-hold yan, right? And the simple reason is because corrections are ABC, zigzags or flats, where the AC tends towards equality versus the A, right? So that's basically the technical insight there. But so nung nag-break to, sabi ko, teka lang, baka nag-top na yung dollar, di ba? And not only did the dollar top, but we now have what looks to be unfolding as a 1-2, and then we have an extended third over here, third wave. And then right now, as the dollar is 105.61, it looks like it's rallying in a wave 4, right? So a wave 4, yung kahon na yan na nandyan, yung blue na box, yan yung 236,382 fib retracement versus the beginning of the 3. Why? Because wave 4s typically stop at that area. So it looks like we're rallying there, and then we have one more lower low. So if I look at other evidences, the weekly chart has divergences, multiple long-term divergences, that's one. Pero yung isang mabigat na ebidensya sa akin is when I look at the other dollar pairs, just take a look at the USD JPY, which obviously was the roaring currency the last couple of months. Klarong-klaro sa akin na 5 waves down yan from the all-time, from the 52-week high. So if you simply take a look at the USD JPY, I don't have it here, just write it down. Take a look later when the presentation's done. Take a look at the USD JPY. It's 5 waves down, very clear, right? And to me, what starts with 5 ends with 5, meaning if we have a 5 wave down, which what we have in the USD JPY, in the DXY, then to me, that's either an A or a 1, right? And to me, just looking at overlaying a lot of the macro considerations, I would label that as an A, right? Meaning the DXY move we have down here, that's an A. The USD JPY down, we have an A. And then we're going to have a counter rally in the B wave. And then we're going to have a continuation move lower in the dollar and in the USDG, in the dollar related currencies, right? So, syempre, when you have an environment where the dollar is weakening, right? To me, that is one leg of the equation, of the advancing phase equation. Remember, advancing phase, two things: liquidity considerations, the Fed, best way to measure that is with the dollar. Second is with our Elliott wave counts or technical analysis. So looking at liquidity considerations, we're now seeing a reversal in the dollar. I think you're starting to see that as well with the weak dollar plays starting to move, such as gold. I'm sure if most of you guys have been following Twitter, there's been a lot of talk about the advance in the Chinese related names, the Chinese tech names, Alibaba, Kweb, all of these other names that have shown relative strength. I'm sure you guys have also noticed the relative strength in the Philippines, although that wasn't seen today. Yesterday, we were up pretty much close to 100 plus points. Some of you may be wondering, but hindi sumusunod ang Philippines sa US. Well, because in a weak dollar environment, money flows out of the US and back into emerging markets and weak dollar plays like gold, commodities, so on and so forth. So, yun yung titingnan natin, right? So that's one part of the equation. We have dollar weakness that we're having right now. I would also like to point out, though, that if you look at the 1-hour chart of the DXY, you have some bullish divergences building already, which is why I think that maybe we might be starting a counter rally in the DXY over the next couple of weeks. Maybe we make one more lower low, right, to make that 5-wave completion along with that extended third wave. Maybe we already completed the down move in the dollar. So I'm not too confident about this count kasi it's wave 1 down eh. Hindi ko naman alam kung yung wave 3 alam ko extended, or let's say wave C, right? Wave 3 extended, pero yung wave 1 down, this could be 1, 2, 3, 4, 5 already, right? Or it could be 1, 2, 1, 2, 3, 4, 5 to complete the 3 and my 4, 5 pa, right? But the point is that we have 5 waves down move in the dollar, just looking at the USD JPY, and then we'll likely have a counter rally of some sort, and eventually we'll have one more leg down in the dollar, which I think will open up a window for risk assets, right? So that's the dollar, right? When we talk about liquidity, syempre, that's measured by the dollar. But the principle is that yung liquidity talaga is what moves financial markets, right? So the quote that we always share in Open Journal is the Stan Druckenmiller quote: earnings don't move the overall market. It's the Federal Reserve Board. Focus on the central banks and focus on the movement of liquidity. Most people in the market are looking for earnings, conventional measures. It's liquidity that moves markets. And I think this is an important quote to keep in mind. Why? Kasi a lot of the bear arguments that are pronounced right now, obviously there's a lot going around. The most, I'd say the best argument I've seen was the one by Macro Alf in Macro Compass, right? And he argues that based on all the data, we're seeing definitely a recession come Q1 around March 2023, right? So in my mind, if you take a look at how bear markets bottom in the past, bear markets or prices would pretty much bottom 6 months ahead of the recession, right? So we could be there right now. If you look at the earnings picture right now, most of the bears are arguing that the first leg down that we had in the S&P 500 was a multiple re-rating or multiple derating, so to speak, meaning from 20 plus PE, naging 15, 16 times PE. The next leg down will be revision in earnings downward, right? Revision in earnings downward. And, I was looking at that very quickly before this weekly strategy update. If you simply look at the FactSet data for S&P 500 earnings estimates for Q4, on average, if you look at what's happened there, majority of the earnings estimates revisions have been revised down by around 5 to 6%. And that's usually double the 2 to 3% earnings revision downwards that we've had over the last 5 years when you've had the revision lower. So it's two times the usual adjustment lower in the earnings estimate for Q4 2022. So obviously that's maybe the reason why you had a sell-off in US equities just the past few days. But that's in the earnings side, right? So tayo, syempre ako, my process, and syempre I don't want to impose my process on you guys. Kayo naman, it's up to you what process that you adopt. But for me, it's liquidity over earnings, right? Liquidity over earnings every day. And one of the things that I'll be showing you guys later is how we are already having a silent pivot by the Fed, right? And this was something that I read in a research report while I was in Thailand. So this is just fresh news, right? So I'll be sharing that later. And it's up to you guys if you guys want to look into more, if you want to look into that some more. But just very quickly, this was a chart that I presented last Sunday as well. Last Sunday at the Investor Summit. And what I did share was, let me just, okay. Yeah. So what I did share is this chart, right? So it's pretty much the Philippine monthly chart, right? It's a monthly chart of the Philippine Stock Exchange Index since 1992. And what I'd like you guys to focus on is the right side of this chart, which is 2008 onwards. And the reason why I want you guys to focus on this is just to key in on the lesson that it's really liquidity that moves markets. And this is important kasi, guys, nung 2010 to 2013, even all the way to 2016-17, one of the things that I wish that I knew, that I wish I had already learned this lesson, that it's liquidity that moves markets. Why? Kasi nung 2010 to 2013, when I was working for that asset management firm, that's Private Clients Group in partnership with COL, which is headed by two guys, ex-foreign brokerage guys. While I was a team leader at that group, one of the things that I had the privilege of being exposed to was yung mga roadshow na ginawa namin. And one of the roadshows that we did was, syempre, client kasi ng boss ko, lahat ng mutual funds, UITFs. We would, present sa Sun Life, UCPB, Union Bank, Manulife, Film Life, not Film Life, yung mga large BDO, we presented to BPI, the mutual fund, UITFs. And noong 2010-11, and ano kasi, my bosses were very fundamental macro-based. So, I had the opportunity to witness na nahuli nila na mag-advancing phase. Parang while the whole industry was bearish, my two bosses were pounding the table na magbo-bull market na mag-advancing phase na. And the reason that they gave were fundamental and macro reasons. OFW remittances, BPOs, which were growing, the demographic dividend, if you look at our population, and investments as a percentage of GDP, which was growing, right? And yun yung song and dance that we did. And ako, ang trabaho ko nun, tagabuot ako ng projector, tsaka ako yung tagagawa ng PowerPoint, right? So, I know the material very well. Kasi ako yung gumawa ng slides. Sabi ng boss ko, ito gawin mo. So, ginagawa ko yung slides, right? So, later on, parang while dealing with the institutions, yun yung parang naging, that became the default outlook. That the Philippines was in a good long-term story because of OFW remittances, because of BPOs, because of demographic dividend. And even when Duterte became president, the focus back then was investments as a percentage of GDP because of the build proposal back then. So, in my mind kasi, in hindsight, tama naman yun eh. Tama naman yun. And those were part of the reasons why the Philippine market went up. But in hindsight, I would submit to you that we missed the big reason, the biggest part of the equation, and that's the liquidity, right? And if you look at here, when the Philippine bull market started, kaya naman nag-start yan. Just take a look at when the Fed started QE, November 2008. It was one of those inside candles over here. When did we experience our first meaningful correction? Mismo dun sa buwan, May 2013, that Bernanke announced tapering of QE. That's when we started to correct heavily. I believe it was almost a 20%, 21% drop. And then here at this peak at around mid-2015, when did we start this sideways triangle pattern? We started it when Yellen started to give forward guidance of rate hikes and even try to downplay rate hikes by characterizing it as watching paint dry, right? Huwag niyo pansinin yan. It's just like watching paint dry. Diba? Yun yung sinabi niya. Ganun, marunong siya mag-Tagalog. Ganun sinabi niya yun. So, not only that, if you look at here, when did our bull market top? It topped in January 2018. Kailan ba naging Fed President si Powell? It was in Feb 2018. And in Feb 2018, syempre, when he was sworn in, or before he was sworn in, replacing Yellen, there was a lot of, speculation as to, is he going to be the same as Yellen? Is he going to be different? Is he going to be more dovish? Is he going to be more hawkish? So when he was sworn in, which was Feb 2018, he pretty much vowed to continue the path that Yellen started, which was rate hikes, right? And that was here. And then not only that, when we started to rebound, let's say started to mean revert from here, which is the B wave, yung last half of that rally was the Powell pivot, December 2018 onwards, right? The last half of that was the Powell pivot. And then guess what? When did we bottom? We bottom March 2020 when the Fed came in with that record double bazooka stimulus, both monetary and fiscal, right? So the point, guys, is that, you know, in the markets, there's so many things that can really get our attention, right? There's earnings, which obviously is important. There's yung mga macro, yung mga economic stuff. Ako, over time, I've learned to simplify, right? And ako, while, you know, most of the new people here might find it nosebleed, complicated, not simple. Hindi. Not really. Kasi there's so many things that, you know, we can look at that we don't look at anymore. Most of the Philippine GDP, macro data, OFW remittances, we don't keep track of that anymore. Everything is just simply looking at liquidity considerations, which is driven by the Fed, which is measured by the dollar, right? And second is using technical analysis, whether that's Elliott or classical, which, by the way, those two things are used by the best guy in our industry today, right? So, and we use those things to be able to do what the Philippine traders did before us, who we profiled, who have done, went from 0 to 100 plus million and more, right? 100 plus million minimum. So that's all we're trying to do, right? It seems very simple. It is, but it's very difficult and very hard to do. So this is what I presented last Sunday. Now, it's really liquidity that drives markets. And what better evidence do you have than the Philippine market, who is literally halfway around the world? 12-hour time difference, meaning literally 180 degree mo yung globe. You'll see the Philippines opposite New York, which is the Fed. And, you know, the simple reason for that is because the dollar drives 87% of all transactions. In the Philippines, even more than any other Asian country, because the percentage of hot money that flows through Asia is 20 to 30%. Sorry, that's not Asia, that's Southeast Asia. Philippines, it's 50% pre-pandemic for the last 10 years. Post-pandemic, and this is according to the Phil Equity Corner, since post-pandemic 2020, it's been more than 50% already. So even more so today versus before, the focus should really be just following liquidity. Okay. So next slide, we talked about, so last Sunday, I talked about using the oscillator extreme to just really pinpoint where you are in the cycle, right? So I won't talk about this anymore. These are very well explained in the open journal training videos that we have on the platform, which is available to all you guys, which we expect everybody here to watch. So yeah, so that's the same thing. If you combine technical analysis and liquidity considerations, then that's what combining those two will look like to plot advancing phases, or more importantly, where we are in the cycle, right? So you have a 1, 2, extended 3. You have your wave 4 base, that's a sideways triangle, wave 5. Not only that, you overlay the liquidity, then you'll see that every single base that you had was driven by shifts in liquidity, in the liquidity picture, right? I also did say last Sunday that because the dollar was breaking down, I did say that I was open-minded to the 50-week EMA and the 200-day EMA breaking, which we did for 2 days, and we're back below that. We'll go through that later. And the reason why this is very important, the 50-week EMA is this red moving average over here, is because, and I asked you guys to look at this last week after my weekly strategy update, or 2 weeks ago. I asked you guys to look at the 2008 bear market and the 2001 bear market, and you'll see that it was the 50-week EMA, 50-week that held during bear markets the 50-week EMA being the 200-day EMA as well. So the 200 daily moving average is also the same as the 50-week moving average. We don't use simple moving average, we use EMA, exponential EMA. We talked about gold as a possible, syempre, we can't talk about advancing phases without answering the question, which asset classes may possibly be entering advancing phases now. The only thing we can see for now is gold, right? Gold looking like it's coming out of a cup and handle. That's a 10-year cup and handle, which means that you'll have a bull market of at least 1 to 2 years post that pattern. Should that pattern come to fruition, which is classical technical analysis patterns are pretty much 80 to 85%, so it's not a sure thing. You had some volume come in over here. You had an oscillator extreme over here. No presence of any divergence yet, which means that you still have those higher highs to go. You still have those higher highs that will be coming along with divergences, which will eventually complete the cycle after multiple long-term divergences. So other things that I also presented. Okay, so guys, that's what I presented last Sunday, right? So I asked for an extension for 7 o'clock today because what I wanted to do as well was to run you guys through that presentation I did last Sunday. And the next important thing I want to do today is to go through our usual weekly strategy update, right? And the reason why I wanted to start with a presentation I did at the Investor Summit was because a lot of what we will be talking about today, especially the liquidity picture, the silent pivot, is in context to some of the principles that I just talked about with the presentation last Sunday, which I also just shared with you recently. So just very quickly, let's go through the US chart, right? US chart. So guys, let's do this, right? Before I go to the weekly strategy update, maybe it's better I take a few questions first, right? Baka may tanong kayo based on the presentation that I gave last Sunday, right? So it's 6:19. I'll maybe give you guys 2 minutes, maybe to go on a bathroom break. Also, if you guys want to ask any questions, as long as before we hit 6:21, I'll entertain questions. Baka kasi may questions kayo from that presentation. So we have a question here from Miles. What does it mean when you say you have done your homework? That's a great question. For example, Miles, it's a gold market, right? So right now I'm doing my homework, meaning, okay, I know there's a cup and handle. For some traders, that might be enough, right? For me, part of the homework I'm doing now for gold is understanding, going deeper into the catalysts that I identified. That's number one. So catalysts identified were, there were two things. Number one, you have a secular shift of central bank reserves outside FX dollar reserves and into gold reserves, right? Which I think was driven by the February incident where the US froze the US FX reserves of the Russian central bank as a penalty for going to war with Ukraine. So right now, if you look at it, there's $700 billion worth of $7 trillion worth of US FX dollar reserves that are held by central banks around the world, right? So what we're seeing now is a shift of that money into gold, into reserves into gold reserves, right? So you're seeing central bank buying. So I'm looking into that, number one. Number two, I'm looking into the other catalysts that, syempre, ang problema ngayon ng central banks with all the printing is that ang taas ng debt to GDP nila, di ba? So one of the things that I read before was there was a statement by one of the assistants of the Fed, the US Fed, that ang gagawin lang naman ng Fed is they're going to revalue their gold holdings at a much higher market price. And that will pretty much be used to solve the insolvency brought by the debt. So that's the second catalyst I'm looking at. So doing your homework means going deeper into that. That's number one, deeper into the catalysts. The second part of doing your homework means sino yung mga leaders, right? Sino yung mga leaders? I did mention during the past weekly strategy update that we have 3 picks so far for gold, or 4 picks, right? And these are 3 of them were presented by a Real Vision expert on his 3 top gold picks. And that's OSK, that's EQX, that's Oshkosh, that's Equinox, and then for the small cap, that's Guanajuato Silver, right? Guanajuato Silver. And the 4th pick is obviously Nugget, which is the leveraged ETF. So doing my homework would mean, so one of the things on my to-do list is to go through that video again. And for each part, let's say Oshkosh, is to write down why is Oshkosh a top pick, ganyan, just writing the reasons, writing that in an index card, right? So let's say 1 card, Oshkosh, so that at least every time, let's say, I look at why I'm holding this position, I simply just can refer to the index card, helps me hold on to the position. Just basically understanding like what are the leaders, and when I talk about, let's say, Oshkosh, EQX, ano yung mga fundamentals sila? Why are they the leaders, right? So that I can stay on top of the whys, and if the whys change, then maybe I can shift funds to maybe new leaders during the market, right? Should price confirm that they're no longer leaders. So yun yung mga ano, that's really what I mean when I say doing my homework. Kasi syempre, ang ginagawa natin sa Open Journal, we're very technical and macro heavy, which you can understand a lot of the heads of brokerages are, heads of funds are. Pero part of the homework is of those institutions that they have analysts that they can, na pwede lang utusan, uy, tingnan mo yung company na to. Look at it, make sure walang red flags, right? Look at what are the catalysts. Understand bakit siya top pick natin, di ba? So that's part of the homework that you do. Part of that is also staying on top of the dollar weakness, the gold move, which is also part of the homework, the continuous homework. So I hope that answered the question, Miles. We have one last question here, which I'll answer before I go to the second part of our session today. We have a private question here, says, Sir Javi, why is gold considered a safe haven if it has an inverse relationship with the DXY? So here's the thing with gold, no? For the last decade, maybe 2010 to 2018, 17, for the first part of my career, nung baguhan pa lang ako, I would always think of gold as 2 things. It's a hedge for inflation. That's number 1. And also a flight to safety kind of security. Kumbaga, pag high inflation, gold will do well. Or if it's pag may risk off, then gold will do well as well. That's how I used to think. As I continued to learn more about liquidity, I started to realize that the simple driver for gold is really what happens to real rates, right? And when I say real rates is simply your nominal yield, meaning your inflation expectation, meaning TNX mo, minus inflation, right? And the reality is the more real rates become more and more positive, that's when gold goes down. And the more real rates go negative, that's when gold goes up, right? And if you look at the environment that we've had the last 2 years, or let's say the last 18 months, the last 18 months have been pretty much not 18 months, but the last 12 months. The last 12 months have been characterized as an environment where, number one, remember 12 months ago, inflation was still considered transitory, right? And inflation became more embedded, became more sustained. Syempre, when inflation goes higher, real rates become more positive kasi nominal yield minus inflation equals real rates. If nominal yield minus the inflation, if that inflation goes higher, if that goes higher, then your resulting number goes higher, diba? So inflation, actual inflation, yeah. So yan yun. So the more real rates become positive, right? And that usually happens when the Fed is raising rates. So what do you have right now? And this is what people need to understand. Yung financial markets kasi, they don't work based on the absolute numbers that you have. They work, what I mean by that is financial markets don't work on whether things are good or bad, right? Financial markets work on whether things are getting better or worse. What do I mean by that? Most people kasi will argue that pangat kasi ngayon kasi mataas yung inflation. Yes, mataas yung inflation, but when you say kasi mataas yung inflation, that's looking at markets in the good or bad lens, in an absolute sense. Meaning, mataas yung inflation 8%, or in the US, 7%. Mataas. So, ayoko muna. Markets don't work on that. Markets work based on rate of change, based on whether that number is getting better or worse, right? So, if you look at the last 12 months, syempre, the market priced in higher inflation, right? And market priced in higher inflation. And what we've been getting pretty much the last 4 weeks, 3 weeks, 2 weeks, markets are now starting to price in a lower expectations, meaning your rate of change of expectations in inflation is starting to come down. And that's why risk prices, risk assets are starting to go higher, right? So I'll go through more of that later, right? But let's go through the portion of this presentation so we can finish on time. Okay, so let's go through US markets, right? So US markets, basically we had a failure of resistance, right? So if you look at this chart in front of you, the black line, the black moving average represents the 200-day EMA, 200-day exponential moving average. And that has been typically the resistance level that is held during past bear markets. And when I say past bear markets, you can backtest at 2008 and backtest at 2001. Look at the 200-day, which is also on the weekly time frame, the 50-week move EMA. We would always touch that. Some would label it as the kiss of death. We would, kiss of death and then start to roll over lower. So that's maybe a simple classical way to look at the markets. If we, let's say, overlay most of the open journal techniques that we use to look at the markets. First, let's look at the fib extension, right? Which is the red fib study that you have in front of you. Why is the red fib study there? It's to decipher. Syempre, if you look at our wave count from the all-time high, we have a 5-wave move down, which can be labeled as either an A or a 1. And then we have a 3-wave move up, If you follow my arrow, three-way move up, which can be labeled as a B or a 2. And then we have a five-way move down. And the debate really now is whether this whole thing is an ABC, which is contained by your DCS, by a channel, and that we're now in the process of maybe consolidating below the channel resistance before a breakout. That would be the ABC count. Or the negative bearish scenario is it's not an ABC, but rather a 1-2-1-2, right? And in that 1-2-1-2 context, the reason why we have a fib extension there is because a wave 2 of wave 3 downwards, what usually happens is that will test the 236 or the 382. In this case, we already had exceeded the 236 for like just 2.5 days, 1.5 days, before coming back below that, which again puts an additional dimension of from false moves can come fast moves the opposite way, meaning downward, right? So here's how I'm looking at things, right? Yes, it's not a good look that we exceeded the 236 and we came back down. Not a good look, right? However, I have to be cognizant of the evidence that the move from the October low came in the form of 5 waves up, right? If you follow my arrow over here, you'll see 1, 2, 3, 4, 5 up in what can be considered as a leading diagonal. A leading, or actually, yeah, in the S&P, it's not a leading diagonal because wave 1 and wave 4 doesn't overlap, but it's 5 waves up, right? It's 5 waves up. Not only that, if I take a look at the NASDAQ, this is the NASDAQ, we also had the same thing. We had a failure of resistance, but we also have the same leading diagonal. If you follow my arrow, 1, 2, 3, 4, 5, right? That's a 5-wave move up, right? And syempre, yung 5-wave up move na yan, to me, that's not, hindi yan mabigat na evidence. Kumbaga, just because we have a 5-wave up move doesn't mean I'm gonna like deploy all in bullish na tayo. Hindi, syempre. But it's something that we need to be cognizant of, especially if we combine it with a weakness in the DXY, right? Not only do we have weakness in the DXY, we have a clear 5-wave move down in the DXY, especially if you look at the USD JPY, right? So you have a 5-wave move up in the NDX, 5-wave move up in the S&P 500. And guys, just to be clear, just because the indices are 5 waves up doesn't mean that you don't honor your risk management. Ako personally, I got stopped out with Enphase. I think it was last night, right? ENPH. I bought that as a potential leader. I got stopped out even though the indices were doing 5 waves up. Why? Because Open Journal, we always talk about it's always bottoms up first, right? You always follow the bottom up action over the top down. So we're now looking at the top down. Top down, we have 5 waves up, right? And this was a cool tweet that Mark Minervini sent out, I think yesterday. Just very quickly, he showed the last bull markets that we had. This was the post.com bull market. This is the post-subprime bull market. And what he basically shows here is that every advancing phase that we had, advancing phase, which is what our interest is as traders. Every advancing phase happened when the VIX was below 20. You'll see here red line going up, red line going up, VIX breaks down below 20, stays below 20. Red line going up, VIX below 20, red line going up, VIX was below 20, so on and so forth, right? So this is something that I thought was very insightful because ako, let's say ako, nasa end phase ako. kailan ko siya binili? 3 days ago. 2-3 days ago, tapos na-stop out pa ako at a loss last night, di ba? So, the reason why Mark points this out yesterday is because kapag yung VIX mo above 20, very volatile pa yung action dun sa tennis ball or egg situation, right? Like for example, binili ko yung end phase, right? Syempre, after the breakout, I was looking for a quiet day, inside day. I think binili ko yung inside day after the up move. So binili ko yung inside day. Syempre, pag mababa yung VIX, dapat mabait na yan. Pero dahil mataas pa yung volatility, ibig sabihin nun, hindi pa maganda yung action hindi pa maganda yung behavior ng mga stocks after they break out. And that's why I got stopped out, right? So I thought it was just a simple but really beautiful insight. This was his tweet yesterday. He tweets out a lot Ned Davis research. Ned Davis is a research that I would highly recommend. Nag-inquire ako sa kanila dati, pero sobrang mahal nila eh. I think parang 500,000 a year, or 500,000 a quarter, or 200,000, 300,000 a quarter. So I didn't push through with it. But this is maybe the best, one of the best subscriptions that you can get. Walang sinabi ng open journal dito. Ako na nagsabi nun. Syempre. So Ned Davis is already a guy who was known to be the best technician already in the 90s, right? In the 90s. Kumbaga siya na yung pinakamagaling na technician. Eventually, he put up his own firm, became Ned Davis Research. And I would understand why Mark would subscribe to him, because Mark, being a technician, wants to learn from better technicians. And that would be Ned Davis, right? Siyempre, mas magaling na trader si Mark, but magaling na technician si Ned Davis. So, enough of the side stories. This is S&P 500 versus the VIX. If you look at the VIX right now, we're at 2252, so we're still above that 20. So this is what he was talking about, zoomed in. A nice advancing phase happens when the VIX goes below 20. In the same way that you have a declining phase happen when the VIX stays above 20. I thought this was very insightful. So insightful, I think I might include it as part of the open journal process, when to know when it's advancing phase, when to know it's not, right? And guys, it boils down to this, right? So we talked about US market being 5 waves up, S&P, NASDAQ, S&P 5 waves up, NASDAQ 5 waves up, which would presuppose that the primary count is ABC, not 1, 2, 1, 2. So I would label it as 70% ABC, 30% 1, 2, 1, 2. And the reason why I would label it 70% major probability ABC is because of the 5-wave move going up. And in open journal, what do we do when we have a 5-wave move up? Remember, when we're coming from the low, the first few corrections will be very deep. Syempre, because negative sentiment is negative. That's why you have the 80%, the first 2 corrections that you get off the low, 80% of the time will be zigzags that retrace 50 to 618%, right? That's something that we have in the open journal training videos. If that's something you're hearing for the first time, it means you're not watching our training videos, or you're not taking notes as diligent as you should. But the point is that coming from the low, you have the first 2 corrections, meaning if this is 5 waves up in 1, meaning we have 1, 2, and then you have another 1, and then the 2, those first 2s will be deep corrections, which will be zigzags. I don't say that with any certainty. I say that with 80% probability, because that's backtested. 80% probability, the first 2 corrections will be zigzags that will retrace 50% to 61.8%. And that's precisely why I say that even though it's an ABC action, our strategy for open journal, and this is the blanket strategy for all traders in this call, moving forward, is to wait for the 1-2 action. If it comes with VIX going below 20, before, let's say, being aggressive on positions. And when I say aggressive on US stocks and crypto stocks and crypto. That's what I mean by that. Pero syempre, pag may mga hawak kang leaders that are doing well for you, then syempre, ibang story yun, right? Those are things that you can continue to hold even while we get the 1-2-1-2, right? What are examples of leaders? Before I left for Thailand, I gave you guys two names. I gave you guys Trust Wallet, TWT, USD, which I'm holding also, which I've been holding ever since I recommended to you guys. I recommended to you guys, and then I bought it, and I've been holding it since. So it's Trust Wallet. I also gave YFII, which had a good, nice move, and then after 3 bearish divergences, had a nice sell signal there. So, in equities, you have your leaders as well. I think for leaders, you have certain gold stocks issues, which if you bought at the E1, you should be doing well. Other leaders such as I think the Dexcom, DE, what are the other leaders? You have Halo, I think you have Halo, you have Target Hospitality, you have ASML, you have and all these other leaders such as ARRY, so on and so forth. So there are leaders that, you know, even with 1-2-1-2 action will continue to move higher. But so there are leaders that you can be holding during this time, but generally speaking, and this applies to majority of your portfolio, the strategy is to wait for the 1-2-1-2 before becoming aggressive while VIX comes below 20. And the reason why I say that is because, yes, we do have 5 waves off the low, but we still need evidence of that next correction, meaning that next zigzag. We need evidence of that holding and unfolding in a way that fits the parameters of a zigzag, right? Especially with the bearish sentiment now, especially with, you know, there's a good bear case to be argued for. So we need to see the next move lower unfold in a zigzag way, and it needs to hold the corresponding support levels to the expectations of a zigzag. So that's what we need to see. And I think that might happen as early as next week. This week is going to be a very quiet week, a very lackluster data week compared to next week. Next week is when we have the FOMC meeting. That's December 15, if I'm not mistaken. You have the FOMC next week. And not only that, that's the last meeting for the year. And you have CPI next week as well. So I think those two events next week will really determine how prices unfold, whether we get that zigzag lower. And if we do get that zigzag lower, whether we get that or not will determine the kind of window or runway or advancing phase or nada advancing phase over the next 3 months. Whether we get it or not will really depend on how the next, I'd say, 1 to 2, 3 weeks unfold, especially being with the catalyst being the FOMC, because obviously liquidity is what drives markets, and inflation. So that's what we're looking at. Other things that I thought were worth staying on top of was this particular chart. So this chart shows you the dollar index, the inverse dollar index, which is in white, right? So syempre, what we've learned already is that risk assets move opposite to the dollar. And ang ginawa ng chart na to, this is a chart that was shared sa Twitter by Dan Tapiero. It's one of the Bitcoin OGs. one of the guys that worked with Stan Druckenmiller with that farmland project that that they had the last decade. So what he did here is that he inverted the dollar. And he's showing here that the reason why risk assets are already moving higher is because the dollar is starting to move lower already. Move lower because obviously the dollar is inverted here. But more importantly, what he shows here is how Bitcoin is actually lagging. You see here the NASDAQ moved up, although it's lagging. The S&P 500 moved pretty much in lockstep with the inverse DXY. But he notes that the Bitcoin was lagging. And the reason why he pointed, the reason for this, he pointed to the FTX debacle, right? So, syempre, nag-rally yung S&P 500 the last 2 weeks. Pero nung time na yun, hindi sumubay ang crypto. Why? Kasi, because of what happened with FTX and the negative sentiment that resulted from that, right? So, the question now is does crypto play catch up from here, right? Or does crypto follow, let's say, the zigzag lower in the S&P 500 and NASDAQ? So I honestly don't know. You have to take things from a bottom-up point of view. Ako personally, full disclosure, while I was preparing for this presentation, I had some issues like Matic, which I was able to get at around the 83, 84, 85 area. I had to lighten those positions, maybe sell 2/3, 50%, because it broke the E1, the E1 of the parallel channel after a divergence at the 1 fib extension, which is not a good look. So I had to sell that when it broke the E1, and I'm watching like crypto closely to see if, say usually naman may E1 failure tas bumabalik eh, but sometimes nag-break talaga yung E1, follow through lower. So if it follows through lower, then I'll sell more of my positions. So that's what I'm looking at, risk assets versus the dollar. And then here, right? So this is maybe the second to the last slide. And this is one of the important things I wanted to discuss with respect to the Fed already doing a silent QE, right? But before I go through that, baka may mga questions muna kayo. Maybe I'll use this to field maybe a question or two. Or guys, I'll just go through the slide na lang and then I'll go through the questions later on, right? So, so this is what I wanted to share also in this week's weekly strategy update. I thought this was an important pickup from one of my subscriptions. It's from Luke Groman from FTT, right? So that's the subscription. It's one of my favorite subscriptions that I've had for the last around 2 years now, post-pandemic. And one of the things he picked up from Oliver Milken, which he also is exposed to, right? Which he's exposed to, is for the first time pretty much in 100+ year history, the Fed, meaning the FOMC, moves into an operating loss. Now, let me explain that, right? Why did the Fed move to an operating loss? If you recall back during the subprime crisis, 2008, essentially what happened was that in order to save the banking system, the companies like obviously Lehman Brothers, Bear Stearns, Lehman Brothers, which failed, but in order to save all the other banks, AIG included, what the Fed did is that it started to conduct QE, meaning to buy US treasuries and to buy mortgage-backed securities, MBS. More importantly, the reason why they did that is because they tried to buy all the shit assets from the balance sheet of the banks and place that onto their balance sheet, the Fed's balance sheet, right? That was simply the process of QE. And part of the regulation that they did, apart from QE, was to regulate banks to make sure that they were capitalized, that they were fully capitalized and prepared to withstand succeeding crisis should they happen again. Because remember, the 2008 subprime crisis showed that exposed the systemic risk that the banks weren't ready, weren't fully capitalized to absorb the losses from the subprime crisis. And that's why you had the Fed come in with all these regulations, Basel I, Basel II, Basel III, etc., right? And part of that regulation by the Fed was to increase the level of reserves of these banks, right? And if you recall, yung mga banks ito, they have reserves that they park with the Federal Reserve, right? So follow me very closely. Syempre, sa Philippines, may equivalent dito. Ito yung tinatawag na reserve ratio ng mga banks, right? Ito yung tinatawag na CAR or capital adequacy ratio on the local level, right? On the global level, you have reserves that the bank needs to, keep as reserves. Kung mga cash lang yan, hindi pwede galawin ng banko yan. Meaning, hindi pwede galawin ng banko, kukunin ko yung cash na to, ipapautang ko. Hindi nila pwede ipautang yan. Kailangan may reserve yan, may buffer, porsyento ng hawak nila that they need to keep as reserves. And those reserves were parked on the balance sheet of the Fed or the US Central Bank. Now, here's why the Fed is now in an operating loss for the first time in a 100-year history. What happened the last 12 months? During the last 12 months, nag-rate hike yung Fed 4 times, 75 basis points every time. Fastest pace in FOMC history. So, think about it this way. From almost ZIRP, meaning zero interest rate policy, meaning yung pinanggalingan yan close to zero. And then 12 months later, after a multitude of rate hikes, 0.75 times 4 plus 50 basis points, or X amount of points, we're almost at the 3 to 4% level, right? So ano yung implications nun? The simple implication of that is yung reserves na meron yung banko sa Federal Reserve. Dati, syempre, may interest yan. Before inflation came, let's say 12 months ago, the Federal Reserve was paying maybe 0.25, 0.75% interest on those reserves, right? On those reserves. Syempre, ngayon na umakit na yung interest rate, nag-hike na sila. And they've hiked to a tune of what? They've hiked to a tune of, if you look at where the Fed funds rate is right now, if let's say we're at 3.25, 3.5% coming from almost zero, syempre, the interest expense ng Federal Reserve that they pay to the banks for the banks to park the reserves on their balance sheet, syempre umakyat din. Umakyat yung interest that they paid, right? Umakyat yung interest they paid. So much so that yung absolute value of that interest this year, just this 2022 Q3, is now 200 billion, right? Is now 200 billion. So it's already 200 billion. It's 200 billion over here, right? And ito, so I'm going to read this. Bear noted that Fed could easily have to pay banks 200 billion annually next year, and likely much higher if the Fed funds target hits the 5% level, which numerous Fed officials are targeting, right? Assuming a linear relationship between the 200 billion, which they are already paying this year, and a Fed funds rate of 3.25 to 3.5% and a 5.5% Fed funds rate, 60% higher rates. Fed funds rate could easily drive the Fed to pay $300 billion per year of newly printed USDs to US banks. Ibig sabihin ito, the interest that they pay on those reserves umaakyat from 200 billion this year to 300 billion potentially next year. So here's the key thing that you guys need to understand. Here's what it boils down to. Fed prints 200 to 300 billion annually, hands it to the banks as interest on the reserves. Banks use that to buy US treasuries and mortgage-backed securities. So I had to look into this. And apparently, if you look at the rules, and guys, all I have here is an excerpt, right? Part of this research, what Luke does is that he excerpts a segment from Oliver Milken's letter to investors, where he talks about the plumbing of how this whole reserve system works, right? And apparently, what happens is the interest that is paid to the banks, ang ginagawa ng banko, they don't lend it out. What they do is that they recycle that and buy US treasuries and mortgage-backed securities. So kumbaga 12 months ago, nung walang inflation, syempre walang QE kasi ang liit-liit lang ng binibili, right? Or hindi pa operating loss ang Fed. Now, they're paying 200 to 300 billion in interest to banks, which banks are using in turn to buy US treasuries and mortgage-backed securities. And this started just this month lang. Started just this month, right? So effectively, starting this month, meron na pala nangyayari na QE na 200 to 300 billion annualized that pupasok sa US treasuries and mortgage-backed securities. And I feel like if you take a look at simply, even if you look at, let's say, the 10-year, the TNX, which started to move down significantly this November, then this might be the catalyst for the move lower in the TNX, which, by the way, has a 5-wave move down. And a 5-wave move down suggests that eventually, after a B wave, you're going to have a 5-wave move lower as well, right? So ito yung nakita ko that really stood out, right? And this is something that I'm watching very closely. So in bold for emphasis, this is effectively 200 to 300 billion per year in Fed QE via the US banks, with US CPI still elevated. So the Fed's shift to an operating loss is effectively a pivot of sorts, right? So this is something that got me thinking. Kasi number one, syempre, people are asked, the first thing is, what about QT, right? QT, assuming that, syempre, and if you look at the numbers, hindi pa nila ginagawa yung, they're not 100% doing the QT that they said they would do. And the QT that they said they would do is effectively annualized 1 trillion per year, right? So whatever they're doing on the QT side is effectively being partially offset by the 200 to 300 billion that the banks are funneling into USTs and mortgage-backed securities. So effectively, what does this mean? What does this mean, right? When I was thinking about this while preparing for this, what this effectively means is, obviously, number one is liquidity, right? There's a lot of argument that a lot of pundits are making that that we have earnings which will be revised lower for 2023, and that will cause the next leg down in US markets, right? Yes, that may be true, right? And we see that already in the FactSet earnings revision being revised 5 to 6% lower for Q4 2022. However, what did we learn during the last cycle of Philippines. Di ba it's liquidity, which is more important than earnings? I mean, that's number one, right? And second, what about the fact that S&P 500 or US indices bottom pretty much 6 months in advance of the actual recession? That's number two, right? The third is, while it's not really strong evidence yet, we have five-wave move up in the S&P 500 and the NASDAQ, right? Syempre, hindi naman comparing yun, but we still need to wait for a 1-2-1-2 with VIX coming below 20 before we can really give the all clear and really, sound the war drums and give the all green light for, gera na, diba? Gera na. So that's really where we are right now. I've been back and forth with the market, deploying some positions. Some positions are cuts. Some positions did well. I was fortunate enough to catch TWT and YFII, which I gave to you guys, which I bought 3 to 5 days after I gave to you guys. So I've been fortunate enough to have that to keep my equity curve pretty much at a good level. My US account, although hasn't done very well, so I gave back a lot of those profits, but I am looking to at least position for gold for that, right? So that's pretty much where we are right now, right? So to summarize, we do have some, I did give you like a picture of what these 10 guys did to go from 0 to 100 million. The focus of last week's presentation was advancing phase. Syempre, now that we know they did it in advancing phases, the next question is, how do we identify them? Two things: liquidity considerations. Third is technicals. When we look at liquidity considerations, those are starting to turn, right? Meaning the dollar 5 waves down, USD JPY 5 waves down. You have a Fed which is effectively doing a silent pivot already through an operating loss, 200 to 300 billion. And not only that, if you follow the number one guy to follow in liquidity, which is Michael Howell of Cross Border Capital, you can simply follow him on Twitter. It's Cross Border Capital. You can see the liquidity cycle that he publishes once in a while, and you'll see that we're already close to the pivot from a liquidity cycle turn higher, right? So we're already close to that. Not only that, you're seeing leaders emerge, right? You're seeing gold starting to sniff out that liquidity cycle. You're seeing my weak dollar plays like emerging markets start to do that as well. Syempre, but we're still not out of the woods. We still have that 1-2-1-2 action to contend with. Leaders in the US market are still, there's still a lot of volatility around the breakouts as what we've experienced over the last few days. Me being cut sa end phase, nag-cut ako sa end phase, nag-cut ako din sa, so end phase. Yeah, so nag-cut ako sa end phase and AEHR also, right? AEHR, which was a break even, pretty much break even for me. So there's still, we're still not out of the woods yet. Even with the dollar, after a 5-way move down, there looks to be like a counter rally first before the next 5-way move down. But I'd say that, a lot of work still needs to be done, right? So we have that 1-2-1-2 action to contend with. We have that FOMC next week with inflation next week. And then we'll see what happens, right? Even if you look at Bitcoin, look at the weekly chart, you have a bullish divergence already there. one bullish divergence on the weekly. You have Ethereum, which also looks like we'll see if that's a higher low that it's making, right? That remains to be seen. You have a very nice leader in Trust Wallet for crypto, that's TWT-USD. Obviously, the explanation is simple. After the FTX debacle, there is a trend, a trend was started from a move away from centralized exchanges into more self-custody. And self-custody, Trust Wallet being one of the wallets. And I feel like it has good backing. It was bought by Binance back in 2018. And if you listen to Raul Pal's interviews, he's always said that there's always been that bottleneck of user experience, that once that gets solved, then he feels that that's the next breakthrough for adoption for cryptocurrency. So, tama ba siya? We don't know, right? He's been wrong many times before. He's been right also many times before as well. So it remains to be seen, right? So we have some leaders already that we have. We have Gold, we have Trust Wallet, we have leaders also in the Philippine market setting, right? Which we'll talk about after this in our charting session. And we just have to watch that 1-2-1-2 action. We have to watch that 1-2-1-2 action. And when we get that volatility below 20, then who knows, maybe we'll get an advancing phase maybe next year, right? Or maybe starting this December after we get that 1-2-1-2. Or worst case scenario, what happens is, 1-2-1-2 off the low, right? Worst case scenario is the move from the all-time high is a 1-2-1-2 going down, right? And then we get a wave 3 of 3 lower behind, let's say, some catalyst coupled along with bad earnings or, revised EPS for the S&P 500 lower for next year, right? Either way, we will know soon enough, right? So with that, guys, I hope that was clear, at least for this week's weekly strategy update. The weekly strategy update next week will be the last one, right? It will be the last one, which is also Fed week, by the way.